All right. So now we're going to do exercise 8-13, but part B. So we're doing the same transactions as we did for 8-13A, but now we're going to assume we're using the allowance method. So that means that on the last day of the year, somebody set up an allowance for doubtful accounts, and now we're going to be drawing on that throughout this year. And then at the end of this year, we set up a new allowance for doubtful accounts. All right, so this is just journal entries. So we do our journal. All right. The first one, wrote off account of Dean Shepard, $84.50. All right, so this is like we did before, but this time we're writing it off to the allowance. All right, so this is 413, allowance for doubtful accounts. And what are we writing off? The account receivable for Shepard. And the amount is $84.50. All right, so we did that. Received $500 as partial payment from Dan Pyle, wrote off the remaining balance. And he owed us $7,100, he gave us $500. The amount that we're writing off to the allowance is going to be $7,100 minus the cash, or $6,600. So we've got cash increasing, so that's a debit. We've got the allowance for doubtful accounts, so that's going to be a debit. And then we'll have writing off the receivable, decreasing the asset, and that'll be our credit. 515. All right, so we know we got cash that came in, $500. Allowance for doubtful accounts, and that was our $6,600. And then we have our credit, which is the account receivable from Pyle, right? And it's $7,100. So our debits equal our credits. On July 27, Shepard came in and paid us that $84.50 that we had to write off. So again, this is a two-step process. If we've already written off the account receivable, we don't have anywhere to post that payment. So we need to put that receivable back on the books, so then we can post the cash to the correct receivable. So the first part is reinstating, which is just flipping the one that took it off the books. So you take the same kind of transaction that took it off the books, reverse it, and that puts it back on. 727. Account receivable Shepard and allowance for doubtful accounts, the $84.50. Alright, so we've reinstated the account. We've got an accounts receivable. Now we're going to take the cash and post it. So the cash comes in and we pay off the receivable. Alright, very great. Wrote off the following accounts as uncollectible. Record as one journal entry. Alright, so we sat down at the end of the year and we said, oh, I don't think we're going to get money out of these people, so let's just get them off the books, start fresh in the new year. So we sit down and rewrite each of these off to the allowance, right? So 1231, allowance for doubtful accounts, and the amount is the total, right? We add them all up, it's 13,510. Okay, and now we're going to write off each one. Account receivable Chapman, 2225. Account receivable DeRosa, 3550. Galloway, 4770. Klatt is 1275. Ritchie, 1690. Alright, so we've written those off. With the allowance method, there's one more thing to do. We have to, if necessary, record the year-end adjusting entry for uncollectible accounts. So that means we're going to set up our allowance for the next year and record the expenses for whatever ones we have on the books today that we know will go bad at some point. All right. Now the problem tells us they use 0.75% of credit sales, and their credit sales are $3,778,000. So I wouldn't ask you to calculate how to do this calculation, but obviously you take that number, 3,778,000 times 0.75%, so that's 0.0075. So that means the amount we need to write off is 28,335. This is our bad debt expense, and this is the amount we use to set up the allowance. All right, so it's just one entry. Like I said, on an exam, I would just give you, the company uses 28,335 for their allowance for the next year, something like that. And then you don't, oh, that's what I have to write off to bad debt expense. This is where the bad debt expense comes in. And allowance for doubtful accounts. Right. Bad debt expense, 28,335 and 28,335. All right, so that's the last bit of that problem. For allowance method, you have to set up your allowance for the next year. All right, and that's it. The next and final problem for the chapter is going to be exercise 820, and that will be on a separate video.